folks. S&P's right now up by 39 points. To talk about some of the market action, folks, we're going to jump over to our man, Steve Rhodes. You can listen to Steve's outstanding program, folks, The Trader's Edge, every market day right here at TFNN, live on Tiger TV, 11 a.m. till noon Eastern time, and his daily newsletter, folks, right on the front page at TFNN.com. You'll see Mastering Probability. All the newsletters we do, folks, come with a 30-day money-back guarantee. You hit that subscribe button. You can sign up for a month for $149, and you can add, folks, savings of $199 and $593 on the 6-month and the yearly, and they all come with a 30-day money-back guarantee. Steve Rhodes, good afternoon.
Hey, Tommy, how are you today? Good to be with you.
Good to be with you as well, man. We're easing back into a little bit warmer weather here in South Florida, Steve, but we got a nice little cold stretch, man. How you been doing?
I hate cold.
Yeah, I enjoy it only because, and then you get a couple weeks, you say, oh man, I know why I ran out of Boston. I just visited beautiful Boston, which I missed, to get my cold weather fix and run back to Florida. Totally, man.
Yeah, I don't need the cold weather fix out there. Did you guys get snow flurries?
No, we didn't around here. I don't know if they got it maybe a little bit further north and maybe to the west, I think, maybe possibly, but we didn't. Yeah, I was trying to keep my, the kids would love it, of course, but not quite.
Yeah. Pretty extraordinary cold front, that covers the nation. I mean, major. And we just had...
we got it made down here. I know. Don't get us wrong, folks. I see those, my mom's down there, Boston. My goodness, Boston. My sister up there, Caitlin, it's wild, man. What's it, 2 degrees, feels like negative, just wild, yeah.
Well, I think that cold weather left only buyers in the market out there, because if we take a look at
looks like it, man, for sure.
Because if we take a look at the New York Stock Exchange, and that's the chart that we've got up on our screen here, and this was a snapshot from a few hours ago. On Friday, the New York Stock Exchange made a new all-time high for its advanced decline oscillator. Now, it had done that maybe about a week and a half before that as well. And it looks like today, Tommy, at least as of 2 hours ago, we're going to make another new all-time high. And it's really important. It's really important from this standpoint for our traders and investors out there to understand that breadth confirmation like that, it delays a risk of a pullback. It does not prevent the pullback, but it delays the risk. It delays the percentage risk. Let me give you an example. The odds of a 5% pullback after the New York Stock Exchange makes a new all-time high in the following week is less than 2%. In other words, there's a 98% chance that there's going to be less than a 5% pullback out there. Those are pretty good and reasonable odds. In fact, less than 2%. In fact, we can go out a full month, so 27 days. I'm going to, not the 28th day, but 27 days. The chances of a 5% pullback are only 3%. So there's a 97% chance that we're not going to see that. Doesn't mean that it can't happen. It has happened before. Somebody might say, well, about how many instances did you check? And I would say the answer is nearly 1,200. I think it's 1,198 as of today, if this is the new all-time high out there. And so it's a pretty solid piece of information that's helpful. The times when this hasn't worked, it's typically been some type of exogenous event, COVID, so different elements like that. So it's a really good chance that we're not going to see much of a pullback, or certainly in the next month. And this is really helpful because there's a lot of people, Tommy, that are on the side of being really short this market out there. And I'm just sharing with folks that the statistics do not bear that out. If we take a look at I use volume. Your dad, let's make sure your dad's not listening to me talk now, because the way that the Qs make their bottoms are with volume. So this is a chart of the QQQ ETF. The bottom I've got right now, the yellow line is at 75 million shares. So it's kind of a benchmark that I use. The green arrows show you those different days where we saw that kind of volume inside the Qs. And they have all identified bottoms at that time. Is it a long-term bottom? Well, sometimes it is. If you take a look at the bottom back in April, at this stage here, we can consider that to be a long-term bottom out there. So that was another signal that we received last Thursday. Last Friday, in trading, at the end of the day, the Dow negated its Rhodes. It's a sell the D point top. Where my cursor's at back here, in the late part of of January is when we got to sell the D point top. That's the C to D leg, that blue line there. It was negated on Friday. It's triggered one of Basil Chapman's wave number 7 Gs out there. That needs a lower high to confirm. So there's still the potential for the Dow to form a short-term top and pull back to that green oscillator and change line right around 49,680. The Dow last week negated its weekly TD9 count top. When we negate these topping signals, it really kind of tells you about where the momentum is. And as long as the Dow remains above its green oscillator and change line, currently printed at 49,739 for its weekly time frame, it's in full breakout mode. When we take a look at the monthly time frame chart, we're going to see a TD9 count top that is likely going to confirm at the end of February. It's only today, the 9th, but right now it looks like it'll confirm at the end of November, and it will complete by the end of March out there. And because the top on a TD9 count pattern can take place, Tommy, on the bar following bar number 9. So we've got out here is question, do we have a top that's going to form right now? I say no. We got a weekly that negated its topping signal last week, as well as the daily time frame. So I believe that the monthly is going to move higher. When we take a look at the seasonal pattern, this is a 129-year seasonal pattern. This takes a look at all the midterm presidential cycles out there. And what I've identified for folks, the red vertical line is where we're at today. And what this suggests that we should see a top form right around March 20th. So we put that together with what the Dow was doing out here. This says to me, you know what? That March 20th becomes a really decent target area for us to start looking for some type of top inside of the Dow. Now, that top only turns out to be about a week and a half's decline, because seasonally speaking, over that 120-hour period, we've typically bottomed in March and then made the final high during the midterm electional seasonal cycle right around April 20th. And then we can see that price moves lower should price fall along this analog into the middle or end of September out there. So I think there's really good chance that we're going to see some type of top form in the March timeframe. But it's not now. And it's not now because we got that market breadth and everything else. Tommy, when I take a look at this set of charts, these are all of the monthly charts or the primary monthly charts for the indices. If we take a look at the top, these are the ones that we can trade. The Dow, the S&P, the NASDAQ, and the Russell 2000. The Dow we've already covered is bar number 9 this week or this month. Same thing for the S&P. Same thing for the NASDAQ 100. Same thing for the Russell 2000. Bottom row, basically going to be the same thing for the semis. The same thing. Well, not the transports. So transport's a different animal out there. The AU, by the way, negated its TD9 count top on a monthly basis last month, Tommy. So for those folks that are holding GDX and have been dealing with whatever small amounts of pain or what have you, I don't think that the move to the upside in the XAU or the GDX is done. The New York Stock Exchange also going to complete confirm a TD9 count top at the end of February, complete that pattern in March. The Dow made new all-time highs today in terms of U.S. dollars. Everybody knows that, but it also made in terms of Chinese yuan and Canadian loonie. So it leaves us with partial confirmation of a global rally. We'd really like to see, Tommy, all of these charts trading at new all-time highs out there. The Dow is taking on its rising price channel out here and trade above a horizontal trading range line at 49,290. If we get above this level, then 52,813 becomes the next price target out there. And finally, last thing with regard to how indices are trading across the globe, we are in breakout mode in terms as far as trade above last year's high for the Dow, the S&P, the DAX, the FTSE, the SOX, the Shanghai, and the Nikkei. Tell me we've got a major global rally going on.
Pretty cool, man. I appreciate you covering the Dow. That Dow looks so strong. It does, man. Remarkable 50,000. We got to get those Dow 50,000 hats. But boy, that Dow right now.
We'll get the 60. We'll get the 60,000 hats.
Hey, as we know, it seems like we'll just accelerate, man. Numbers. With the next 10,000 is easier than the last in those numbers. Steve, thanks so much, man. Look forward to the program tomorrow. Appreciate it.
You bet. Take care.
Have a good one. Folks, check it out tomorrow morning. You're talking about it. Tune in, Trader's Edge, 11 o'clock. We're coming right back.